Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of $75,800. That's made up of the $46,544 in my stake portfolio and the $29,322 in my Vanguard portfolio. Today I'm going to be going through, giving a little bit of an update on how my holdings are looking, my plans going forward, and how things have been recently for me on my investing journey. Overall, if you've seen the last video, you'll notice that my total investment amount actually hasn't gone up, and that's because I didn't invest last fortnight. I had some personal expenses I had to pay for, which were quite large, so I decided to allocate my funds towards that, obviously, and I didn't get to put any money aside into my investment portfolio, but going forward, obviously in the upcoming fortnights, I will be doing that, as the goal is to get close to that $80,000 mark, which I'm edging closer and closer to. As you can see, my Vanguard portfolio as well is almost hitting that $30,000 mark, which was a goal of mine, and that will be nice for another thing to check off. But stock prices have actually gone up a lot if you've been keeping up with the market. As you can see, my stake portfolio alone is up 33% now. If you'd seen some of my older videos, not even that long ago now, it was only up around 22% after it was previously in the 30s, and it had that market pullback, which you can see if you just look at VOO, which is my biggest holding. You can see here was that pullback, and I did take a bit of time to invest some money into my portfolios when this market downturn happened, and I've done a few videos on that already, such as my purchase into Amazon, which I'm now up 10% on, which has been quite good. I tried to buy this dip on it. I believe it's a quality company, but I've already covered a lot on that, maybe a bit more later. I also recently put money into Microsoft, another strong position I believe in, Google, and obviously VOO, which is my biggest holding. Having a look at the last year, you can see the S&P is up basically 27%, which is incredibly strong. The last 2 years have been pretty good, but if you look back at that kind of 2022 time, which I was doing portfolio updates back then, everything was pretty much flat. I was down in the red a lot because I'd been investing a lot in 2021, but what that allowed was for me to build up positions in companies and ETFs I believed in to kind of get these gains now. Because you look in the last 5 years, the S&P is pretty much up 100%, which is just under, call it 19% a year, which is really, really strong, especially when you look at historical averages. At the moment, it is a bit expensive in terms of looking for where to allocate funds. That's why I'm happy I did buy into that dip when I could, because even in my Vanguard portfolio, which is just two ETFs, VLC and VGS, tracking international shares and Australian shares, those stocks have also rebounded up to 125. This was previously around 120 at one point. And even VLC was around 78, 79. It's gone up to 81 now. So stocks have really rebounded, and it makes it a little bit harder to buy in when obviously prices go up like that. But that's not going to stop me. My goal is still to dollar cost average into positions I really believe in, especially when you look at some of them, which is like my biggest individual holding is Microsoft, which I'm up around 32% in because I've been buying in more and more. But it's only up 1.5% in the last 6 months alone. You can see it had this really strong climb into basically 460, 470 kind of range, and then had this big downturn, which I kind of bought into, and now it's turned down again to $416. So this is a position I'm looking at. Again, I've got a big holding in Microsoft already, and it's pretty much level with the S&P over the last year, but in the last 5 years, obviously, it's over doubled the returns. And it's one of my favorite holdings when I look at a company to invest in. Its business model is so strong, subscription, recurring revenues. They've also kind of got that up in AI with their partnership with OpenAI and ChatGPT. So it's good to kind of keep my eyes on Microsoft. Again, do your own investments and think about what you want to invest in and what suits you. This isn't advice, but this is one of my favorite holdings I have, and I'm currently up around $1,400. And when you look, again, these are just analysts' expectations. You can see amongst the big banks and other places, everywhere is pretty much predicted for it to go up. Again, you have to kind of do your own independent analysis into thinking what you think the stock will trade at and what a fair prices to invest in Microsoft. But for me personally, if I had a bit of money sitting there now, if I didn't have to pay for those expenses, this is a position I'd probably look at growing, and I probably would have been putting a bit more money into VOO. So if I can get some extra money aside, I'll probably be investing in just to kind of grow these two positions. Also, whilst covering my stake portfolio, I have broken down a few times what I kind of want my allocation weight to be. So VOO, which tracks the S&P 500, I want it to be sitting at 50% of my portfolio weight. The reason being is because I don't think I'm necessarily some amazing investor. I just kind of want to get as much strong market tracking returns as I can, and the best way of doing that is obviously to invest in the S&P. I realize that I'm pretty overly levered towards tech, be that Amazon, Apple, Google, Microsoft, VOO, and then I've got very small positions in JP Morgan and Costco. They take about 10% up. Even you can add McDonalds into that. That's around 13% of the portfolio weight. And then when I look at Vanguard, obviously with Vanguard, I'm investing in just ETFs, and you can see VLC. This is probably a lesser known one in comparison to my other investments, and pretty much it's had a good year, 17%. If you follow any Australian stocks, you would have seen a lot of the big banks and stuff like that have had decent years, but BHP, which is the biggest stock here in Australia, hasn't had a very good year. You can kind of look at it here when you look at the holdings. Commonwealth Bank, like I said, BHP, CSL, all the major holdings is what this ETF kind of invests in, and it does pay out decent dividends. Again, I'm not a dividend investor by any means, but it does help still getting them, especially here in Australia with like the likes of franking credits. I'm just kind of reinvesting all my dividends to hopefully keep growing these positions, and then in the future maybe I can even do well off the passive income, or just use it to keep investing and growing and getting more capital gains hopefully. In terms of total returns, obviously the last year has been pretty spectacular. It's kind of been a standout year, but it's typically averaging, you look at 10 years to even 5 years, kind of around that 8-9% return, which is still quite strong, especially when you compare it to property. In certain areas, obviously, it's been pretty consistent. And there's also, this is a lot more liquid. I can kind of sell out of this whenever I need it if I do want to invest in something else, or if I need funds pretty quickly. In regards though, with the reason why I invest in VLC instead of VAS, which is another popular ETF here, which pretty much tracks the ASX 200, that was a position I did invest in at one point, but I decided at the time I wanted to invest in this ETF, VLC, because like it says, invest in around 20 Australia's largest companies, which make up 70% of our market. The VAS was already so heavily weighted to VLC holdings, and I just decided I think the biggest players were going to have the best year, and obviously they did. They had a very strong year, but I'm probably going to reassess this. But I do need to look a bit more long term. Sometimes I can catch myself thinking too short term with some of my investments, but I've been pretty good in terms of my stake portfolio in terms of looking long term, so I want to carry this to my Vanguard and then hopefully get this to $100,000 eventually. I know it seems like it's very far away, but I still remember when I was doing portfolio updates and my portfolio was sitting at $10,000, and now I'm at $75,000. So as my dividends get bigger, hopefully the snowball effect just keeps going and all my positions can get bigger. That's what every investor wants, obviously. And then I can use this money, like I said, maybe to go towards a house deposit or go towards anything. It's just for typically building wealth. And as you can see as well, it's had a pretty good past 5 years. It's much better than just my money sitting in the bank account. So I'm trying to kind of diversify. I still want to keep strong savings just because I think you should diversify and keep a bit of cash on you as an emergency fund, things like that. I'm trying to build my cash position up. That's why my investing's been a bit slower recently. But I do want to get a balance because I don't want to have to draw from my investments if I need funds in the short term. I'd much rather just have them on hand and then not have to sell out at an unfavorable time. Looking at VGS as well, this is the international shares ETF. This is a position that actually traded down a little bit or got hit because it does have some exposure to Japan and other international shares. And as you can see, it's up 22%, so it's had a really good year, pretty much. A bit less than VOO, but I can't actually invest in VOO on my Vanguard portfolio here in Australia, which is quite annoying because that's one position I really wanted to. But this ETF is pretty close in terms of what I can get. It also distributes dividends quarterly. They're not as big as my VLC one, but it's still strong dividends that I just reinvest back into the stock. And again, you take a look at the last 5 years, it's been quite strong. Again, I haven't been investing in it for that long. If you've seen any of my old videos, I only made this Vanguard portfolio to kind of diversify away from stake as well. Because whilst I've had a great experience with stake, I also just wanted to have a separate platform just to keep things, again, in case something was to happen, just to have this as well. And this is a position I plan to continue to grow in. This position was around $10,000 smaller than my VLC position, but I kept building it up, and I think it's sitting at around close to 55, maybe 60%. It's a bit more than my VLC position, but it's incredibly diversified into 1,500 companies. Everything excluding Australia. That's why I pair it with VLC, because then I can still get the Australian investments. But yeah, it's been pretty good for me. But it holds a lot of the companies I already hold in my stake portfolio again. It's like Apple, Microsoft, Amazon, but also has others like Nvidia and a lot of the major banks over there. And I plan to keep investing in this. It's been quite good, so I'll keep tracking these videos. And if I do decide to invest in a different ETF, or if I decide to just keep these two long term. And like I said, I'm sitting at close to 30,000. The goal is to hit 50. I don't think I'll be able to do it by the end of this year, but hopefully end of next year, I can get this to 50,000. And I'll cover a bit more about the dividends as well when I go through the Excel spreadsheet, because they have been growing quite substantially. I also wanted to go through in my stake portfolio where I kind of plan to sell or make any moves. McDonald's is a stock I bought in it was a bit of a short-term decision. McDonald's had this drop here, as you can see, and I bought in pretty much right near the bottom. I had gotten at a pretty good price, and then I rode this nice run up, and I was really strongly considering selling, and I would have been able to lock in, I think it was 13% gain, something strong in such a short term, and I decided to hold. Because again, I'm not a trader. I don't really have too much experience in trading. I have a strong understanding of it, but I like to take a bit more of a long-term approach. That's why I held, and it had this big downturn. But if you look in the last month or so, it's up 16%, so it's had a really strong bounce back. Obviously, I didn't invest anymore when it was falling, and I still own my 2.8 shares, and I'm sitting at around 13% in the green, at around $256 a share. So it's been quite good. The reason why I decided to hold is because at the end of the day, I don't see McDonald's going anywhere. When I compare it to other companies and other stocks, it's a blue chip through and through. And that's why I decided to keep it. I don't know if I'm going to keep it long term, again, because my goal is capital gains, especially in my stake portfolio, where I'm taking a bit more risk. It's still keeping obviously 50% in an ETF, but I just don't think McDonald's is probably going to provide outsized returns going forward. It might over a long period of time, but yeah, you can see in the last 5 years it's only up 35%, especially when you compare it to the S&P or you compare it to the other tech stocks. It might be a good time to kind of take my gains and move forward, but yeah, do your own analysis. If anyone else is invested in McDonald's, feel free to comment or reach out kind of your investment philosophy, but I might potentially look at exiting that position and allocating those funds elsewhere, because whilst it's not big, it's still extra money that I can put towards one of my other stocks. Potentially VOO is what I'd be thinking, to try to boost that up closer to 50%, because I'd be sitting at 49% if I sold my McDonald's position and invested into VOO, and that kind of helps me stay on target with my investment philosophy. Next, I'm going to go through my Excel spreadsheet. So this is my spreadsheet that I update every month Obviously, because we're getting closer to the back end of the month, a lot of these figures are I put in these figures at the end of every month, and you can see, like it says, my stake portfolio then was weighted at 41,000, which is now sitting in 46 pretty much, and my Vanguard was 27, which is now 29. So it's been a very strong month. I'm excited to, when I put all the figures in, see how much the gains were. But yeah, this kind of gives a bit more of a better visual, I find. And you can see my American portfolio is heavily into tech, with my Microsoft position continuously growing to 18% now. I need to get my VOO to 50, and my Australian portfolio is 54% and 46%. So pretty evenly split. But because I've recently invested more into VGS, that's why it's a bit more ahead. I love looking at these graphs because as someone who's been investing for a while now, it feels like sometimes you're just putting money in and you're not actually you don't see the outcomes too much. And when you kind of put it down on a graph, again, a lot of this is because of my depositing. Obviously, a lot of it's also, or a chunk of it is the gains, but my consistent investing is what's made these charts look so favorable with the trading upwards. And I want to continue that trajectory, obviously, especially until the end of the year. I think the only time this will really slow down is if I look at purchasing a property, which I have looked at, but I think that won't be a job for this year. It might be for 2025, whilst I finish up my studies and just continue to get more and more work experience. Dividends is something I spoke on a little while ago, but I've been tracking a chunk of my dividends for a while, and especially if you look at the Vanguard graph here, you can see if you look at June and you compare, or June-July type of time, you can see I was getting around 125, and now I'm getting, last month I think it was 280. So big jump. As I continue to grow that portfolio, it's just going to keep getting bigger and bigger. And whilst I say I'm not a dividend investor, especially whilst I'm young, it is still nice to sometimes get them as another form of income if you want to draw from it. But me personally, I just choose to reinvest it all. My total dividend, when you look here for stake, is around 460. I probably need to update that. Just check if it's 460 USD. So that'd be obviously around the 700s in AUD. And my Vanguard is already over 1,000. It's basically 1,800, which is quite good. My goal for this year was to get around $1,500 in dividends total, which I think I'll be able to hit. Obviously, it started off a little bit slower, but if I keep putting more money in, which I have, especially into my Vanguard portfolio, I pretty much just need to average $250 a quarter, which I will. So getting $1,500 should be a nice little check off, and then hopefully next year $2,000 or $2,500 as I grow the portfolios more. Last of all, I just wanted to also wrap up around the channel and kind of how things have been going with that as well. Obviously, it's been quite good for me recently. I've been a lot more consistent in terms of videos and shorts after I came back from my holiday, and I'm up to around 821 subscribers, I believe it was, which isn't a lot, but it's been growing for me a lot recently, because I still remember when I was doing these videos and I had 100 or 200, and I just kind of do these videos to hold myself accountable at the end of the day, and that's what the main purpose was, and that's what I've been doing. And I just kind of wanted to track my journey of putting money and investing, just from someone who learned by himself and has never had anyone in his family who's done this, and it's just kind of learning as I go. I've learned a lot of lessons. Sometimes I'll even go back and watch a short bit of my other videos just to kind of see what I did in my old holdings and lessons I've learned, where I've lost money, where I've made money, and then hopefully one day I can kind of look back and just see what I did. I think it just gives you a bit of a good picture, especially when you speak to people who make videos or content. Was never something I really thought I would do, but I just kind of thought tracking these videos has been good. And as I get close to that 1,000 subscriber mark, I think I should be on target to hit it by the end of the year, hopefully beforehand if I keep doing well. But this has been something I've been doing for like 3 years now, I believe, so it's only really getting a bit of trajectory now. And one of my other portfolio updates got around, last time I checked, was 2,200 views, which is quite good for me, especially for a portfolio update where I don't really dive deep into a topic. I just kind of give my general thoughts, how I've been going, how my investments have been going. And yeah, it's been quite good. So I plan to continue to do these videos, and hopefully I can hit that 1,000 subscriber mark by the end of the year. But that's kind of on me. I notice the more videos and content I put out, the more subscribers I get, and I need to obviously get my watch time higher as well. And then hopefully that can lead to opportunities like partnering with people, or just speaking to like-minded people or companies, just so I can continue to learn. And hopefully these videos help other people just kind of see where another average everyday investor is. I'm 22 years old at the moment. I just turned 22. So hopefully I can hit 100 grand whilst I'm still 22 in terms of my stock positions. But that's all for now. Thank you for watching, and I'll do another video wrapping up next week, hopefully with 1,000 or so more dollars invested. Cheers.